Hey guys, it's Sasha. Today I want to talk about 7 companies that I think could increase in value substantially in 2022. I am invested in most but not all of these stocks, and I'm going to explain why. It will be pretty obvious. And I think it will be interesting to share some thoughts on each of these stocks and why I think the company has the potential to have a bonkers year in 2022. Just before we get to the list, here's a few really important points. I do not expect any of these stocks that I'm talking about to grow by 100%, 1000%, or some other dumb number in 2022. When I think a stock might kick ass, I am talking about maybe hitting 25%, possibly hitting 30 to 35%. And if all the stars in the world align, maybe even getting 50% growth on the share price over the year. And the likelihood is that not all of these will do it, but I have a feeling a bunch of them might. If you're looking for 1 gazillion% returns on your money and 30-35% doesn't sound particularly good to you, maybe you need to go and look somewhere else. Feel free to look up the latest dog token that is definitely going to the moon, and maybe you can become a gazillionaire there in the next 2 weeks. Now, I'm also specifically talking about stocks that I think will do well within 2022, not after 2022, not in the next 5 to 10 years. And this means that I won't be talking about some stocks that I have personally big positions in, like for example, Palantir. Palantir could have a great year in 2022. The share price is low enough at the moment, but I don't see any major catalysts or big shifts in sentiment, so they could just as easily just trade sideways for the whole year as well. So this video is about stocks that I think specifically might have a great run over the next year during 2022. And as always, remember that I am just a random guy on YouTube. I do not own a crystal ball, and I am not a financial advisor. I'm just here sharing my thoughts, take them for what they are. All right, first up, I'm going to cover the most obvious and quickly talk about Tesla. I have already made 2 videos very recently explaining in a lot of detail why I think Tesla is in for a crazy month or 2 over the next 8 weeks. And I think the impact of those catalysts and everything else happening in 2022 can have a ridiculous effect on their share price. My latest target price for Tesla stock is $3,000. So I continue to see a substantial upside, although not quite as substantial as when I was talking about this exact target share price when Tesla was selling for $540 earlier this year. But here's a short rundown of some major reasons why I think Tesla stock could climb substantially in 2022. Tesla has 2 new gigafactories opening up in Berlin and Austin that dwarf the 2 already massive ones that they have in California and Shanghai. Deliveries from both of these are expected to start from January this coming year and will ramp a lot during the course of 2022. Their China factory is also being expanded at the same time in the first quarter of 2022. So together with all of that and the fact that production is already improving, getting faster with new gigapresses, better design models, the production rate in 2022 is likely to increase dramatically. Then we have the new models. The first semi-trucks are apparently about to be delivered to Pepsi, and in the last few days, Tesla started selling several different Cybertruck-themed merch on their website, ranging from a whistle to a children's ATV. So we're getting a whole load of hints the Cybertruck might already be on its way, or at least coming at some point soon. Now, production of the 4680 cells is also improving very fast over a Cato Road facility, and that is likely to be a huge set of improvements for Tesla in 2022 as they switch their vehicles to using these new, cheaper, better, in pretty much every single way cells, and that's going to give them a leg up over what is already a massive competitive advantage. And then there's a million other things going for Tesla as well. The stock is likely to hit investor grade level, which itself will have some benefits to the share price. New factory sites are probably going to be announced during the course of next year, and ground is probably going to be broken. So that's going to be a whole next generation of factories we're going to be talking about. And hopefully the chip shortage is going to begin easing towards the end of the year. So as a shareholder in Tesla, I am very, very excited for what the next year has to bring, and I think is going to be bigger than most people realize. Which brings me to my number 2 on my list, and this one might surprise a lot of people, especially after I just talked about Tesla, because at number 2 in this list is Ford. Yes, Ford, the old school manufacturer that makes, old school ICE cars. Like many others in this dinosaur car manufacturer club, Ford has made their fair share of mistakes, don't get me wrong. But unlike the likes of GM, Toyota, BMW, and many others, Ford is actually making some big moves in the right direction. They are the only US car company other than Tesla that make an EV, the Mach-E. And that is actually not as bad as some Tesla fans would lead you to believe. Sure, it might not beat Tesla, but it certainly beats GM, who, are leading the world with a Chevy Bolt that is quite literally on fire. And in May or June, Ford are bringing out the F-150 Lightning. It might not be as tech-focused as Rivian. It might not look as futuristic as the Cybertruck. Sure, it doesn't have the same kind of appeal to the same kind of people, but I can tell you now, that a decent, proper, working, towing electric F-150 truck that works, that looks like an F-150 truck, is going to do very well. The F-150 is the best-selling vehicle out there for a reason. People like it. And Ford's share price has gone up a lot in the last few weeks to around $20 at the moment. That's massive. But I think the demise of other large manufacturers in 2022, and they're going to get hit super hard, the arrival of the Lightning, the announcement of other new electric models, building on the Mach-E, improving it down that front, is going to be very substantial as a collective set of catalysts. The US and global EV markets are going to be much bigger than just Tesla. So the other players will have to fill some of the gaps, and Ford is showing that they're at least trying, which is much more than you can say about most of the rest of the competition that is apparently still coming. Now, next on my list is Google, or Alphabet as the company is now officially known. Google was the first company on my list of companies that I think have a chance to grow tenfold in the next 10 years, and the thing with Google is that I expect that growth to be pretty consistent and pretty continuous. Now, sure, Google is already a huge $1.9 trillion company, but they are doing a lot of things right. They are not very popular, and for whatever reason, they seem to be not talked about much on social media. Revenue is growing at 41%. Net income is growing at over 50% year on year. The PE ratio is just 28. And I think Google has a long way to go when optimizing a number of their businesses, including search and YouTube. I actually think their cloud computing can have a really big year in 2022, and the world of online advertising is absolutely exploding. It is nowhere near saturated, and it is growing so fast. I think it has a whole decade of massive growth ahead. I actually think we're just getting started with that, and guess who runs the vast majority of online advertising? It runs through Google. Now, nobody really talks about Google in the investing cycles, not in the popular ones anyway. But the share price is up 57% in the last 12 months, over 250% in the last 5 years, and I don't think this is anywhere near some kind of peak just yet. So if I was looking for a stock that would have a pretty robust, pretty good chance, no, by no means guaranteed, but a good chance of hitting 30% growth or more in the next year, I would definitely be considering having Google in that portfolio. Now, before I move to the next one, I wanted to do a quick important announcement. I have just launched my community Discord, available to all channel members. You can join by hitting the join button on YouTube if you prefer. I think that's only available on desktop, or you can also join on Patreon as well, which I've just created and set up and launched. I'm going to put a link in the description. It doesn't matter which you choose. I think the price is pretty much the same. It'll fluctuate because they work in slightly different ways, and you get exactly the same benefits. The community is brand new, but that is where I'm going to be sharing all the stuff that doesn't make it to videos, some small bits of information, and my target share prices, models that I use. It's generally going to be a place for us all to discuss money, investing, and so on. Channel members are also going to be getting the best possible discounts on whatever it is in the future. I might just be working on some kind of educational material for January, more on that later. And you'll also help support the channel, which I really very much appreciate. So if you are interested, please join on whichever platform you prefer and get on Discord, and I'll see you there. All right, next up is another company that I have talked about a lot, and it's one of my biggest positions at the moment. It's FIVERR. I have recently made a video explaining my investing thesis in FIVERR in quite a bit more detail. Feel free to go and watch that video. I'm going to put a link here in the description below and up here as well. I see FIVERR as being massively misunderstood, but analysts don't really understand, I think, this stock. Analysts don't really dig deep enough. And in the last few days, FIVERR's share price has completely collapsed. Enough people mention it in the comments, but I do pay attention. It got completely obliterated. As I'm recording this video, FIVERR is trading at below $130. And FIVERR is very much a long-term play on the one hand. I don't expect them to become profitable in 2022 or even 2023. And I don't think there will be many huge catalysts for them. FIVERR is a tiny company and nobody really in the world of investing pays much attention to them. Their market cap is below $5 billion, which is nothing. But I also think that two things are likely to play out for FIVERR in 2022. Their numbers continue to be phenomenal, quarter after quarter after quarter, and despite that, the share price is down 30% in the last year. A lot of growth stocks have got hit hard in the last 3 weeks, but FIVERR got hit way harder than most. And my projections show that from Q1 next year, there may be some very interesting revenue numbers showing up in their quarterly results that might just grab some people's attention. And if FIVERR begins posting quarterly revenues breaking $100 million in 2022, I think people will begin studying their business model a little bit more closely. If we see an ongoing situation with new variants, ongoing slowdowns, countries forcing people to work from home, socially distance, all of that, if we see that continuing, FIVERR is only going to get a boost from that. But I also think that 2022 is going to be a year where we will see massive changes in stuff to do with work and how we have adopted as a society over the last 2 years. I see those changes becoming more permanent. Changes like people working more remotely, more flexibly in terms of time. Things that are going to have a big shift in ongoing sentiment about how people think about the world of work, about how people think about working for large corporations, about how large corporations think about working with smaller contractors or smaller companies. And I think that that is going to help people understand what FIVERR is offering and where FIVERR is headed better. So FIVERR might be a bit more speculative in 2022 in my list, but I am very, very interested. And I balance my portfolio out with some of the other stocks that I'm talking about that may be a little bit more concrete, so I'm okay with that. Okay, next up on my list is Pinterest. And Pinterest shares have a lot of similarities with FIVERR in terms of the thinking. The share price has been smashed to pieces recently, trading at just $37. And I see a huge upside on that share price. I talked about it in some other videos. Pinterest is in the very early stages of optimizing their monetization. And I think that in 2022, monetization is going to be the big part in their quarterly reports where I expect to see a lot of movement. I have a feeling that their user base probably won't grow a lot. Their US numbers are relatively saturated already, so growth is going to be pretty slow there, if any. And I think most of the growth that does happen will be coming from the rest of the world. And Pinterest revenues in markets outside the US are tiny at the moment. They're pretty much negligible. But we have seen plenty of examples out there of other companies starting out in exactly the same spot, but then growing it substantially over time. Facebook, for example. And Pinterest is very, very early on in that journey. So I think there is a massive way to go on the monetization front. And if they deliver on that metric in 2022, the share price just could see some big long-term benefits as well as people begin seeing that non-linear growth come through. And while we're on the topic, Facebook also happens to be on my list. I know. they are called Meta now, but come on, are we really going to call them that? I don't know. Anyway, Facebook has become really unfashionable in the world of YouTube investing channels and generally as a sort of topic of conversation, but I definitely think there is some very interesting potential for them over the next year. We have a company whose net income for the first 9 months of 2021 is $29 billion, up 62% on the previous year. And Q3 maybe didn't grow quite as much. Revenue was only up 35% and costs were disproportionately higher. But show me another company that is posting those sorts of numbers, that is posting that sort of growth, that is expecting to grow at 50% or thereabouts in the near future, that trades at 22 times earnings. I mean, you don't have to be a maths whiz. Just build any DCF model that has a growth rate of, 20%, going down to 10% a year, 6 times less, by the way, than what they're doing right now, and you'll see that the valuation can look very cheap. And after their recent rebranding and shift in focus, I think one of the biggest things that I'm looking out for in 2022 for them will be how Facebook begins improving the monetization of things like Instagram, WhatsApp, and auxiliary services. I think the core Facebook platform is going to continue doing very well. Their groups feature is continuously delivering and working really, really well for them. But as we begin seeing new revenue streams show up, and smaller revenue streams taking up a greater share of the total pie, I think the big factor will be the sort of confidence that investors are going to get that Facebook's earnings are becoming more robust and more resilient. And this can have a big impact on the share price, in my opinion. Will their PE drop to below 20 or maybe head towards 15? Well, I very much doubt it. But if their earnings continue to grow along the same trajectory, that is what will happen if the share price doesn't go up. And on that note, let's talk about the next company on my list, and it's Twitter. Jack Dorsey just stepped down as CEO to focus on Square, but Twitter shares something I really, really like with Pinterest. They have proven that they have a monetization strategy, and they have proven that that strategy can grow and scale very fast. But at the same time, they are still relatively early on along that path. They have made $1.3 billion in revenue in Q3 2021, despite being early. And without the one-off legal case that cost them a whopping $765 million, they would have had a net income of somewhere in the $230 million range. Revenue is growing very fast, 40% year on year, and the profits are going to grow non-linearly with revenue from here because they are now past the break-even point. Twitter is currently valued at $34 billion, and the ridiculous thing is that this is only 37 times the annualized profit from Q3 if you strip out that legal case. I think for a company at this stage of growth, this early in monetizing their business, and with this level of monopoly and future potential in what they do, this is really, really low. And in 2022, we should see a full year of profitability, which is going to be pretty big, and the net margins should begin looking really, really interesting to people paying attention. And that could have a very, very noticeable effect on the share price, in my opinion. If you found this list interesting, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.